Good morning, everyone. So are you a co-signer on somebody's mortgage? Are you on somebody's bank accounts or investment statements for estate planning purposes and to speed up the process of probate upon their death, anything like that? Then you might be in what's called a bear trust. Now, I've been putting off making this video for a while because I just wanted to see, first off, get a clear understanding of what was happening in the world of bear trust, but I also wanted to have some experience with it. And I got to tell you, probably the hardest part about this whole thing is just figuring out if, in fact, you do have a bear trust agreement. Okay, so whether you have something on paper or not doesn't matter. It is a matter of fact of who are the trustees and who are the beneficiaries. Okay, so if you are listed on somebody else's asset and you don't benefit from that asset, you are a legal owner, you are a trustee, and they are the beneficiary. Okay, that's the gist of it. Now, a trust return, a T3 return, this is new for 2023, for year ends ending after December 30th of 2023, that they have to file a trust return. Now, there's no tax to be paid or anything like that, because in this type of trust, in a bear trust, there's no income earned in the trust itself. Okay, it's all claimed by the beneficiary, which is fine. But now you have this annoying filing that you have to do, and if you don't do the annoying filing, then it could lead to a $2,500 late filing penalty, which is $25 a day times 100, maximum of 100 days late. Okay, so what happens if you don't file a trust return? Well, if you don't file a trust return, let's take, for instance, a parent that has co-signed for their kid's mortgage. Okay, so they co-signed for a mortgage, and in 5 years from now, that house has appreciated, let's say it's went up $50,000 in the last 5 years. Okay, they go and they sell the house. The CRA could, if the trust return isn't done, they could come back and say, hey, those beneficial owners that had that property, there was more beneficial owners to that property, and we can prove it because trust returns weren't filed, and those parents cannot claim the principal resident for the gain on that house. So those parents are going to have to take half of that gain, or whatever their portion there is, and pay tax on that. Okay, so that's really the downfall if you don't file a trust return. That's one potential thing that could happen anyways. Okay, so when's the due date for these trust returns? Typically they're due 90 days after the beginning of the year. So typically it's March 31st. This year it's March 3rd, and then this year, because of when Easter falls, it would have been April 1st, but then there's a holiday, so then it becomes April 2nd. Okay, so your trust return is due April 2nd. Okay, again, even if you don't owe any tax on the trust return, which if it's a bear trust you won't, but you could face up to a fine of up to $2,500 for not filing that return. So I hope that helps. I also hope that you have somebody, if this situation or any of those situations apply to you, that you have somebody that you can reach out to and make sure that this return is filed. And we don't have any history to go on and see what the CRA is going to do, or are they going to come and attack everybody that co-signed for a loan and is sitting on the title of the house? Probably not. I'm not sure how they could really have the manpower to do something like that, but eventually they could have the argument, so you would pay some tax on the appreciation of a house later on down the road. So anyways, protect yourself with all the new regulations that the government's putting out recently. It's becoming more and more frustrating, not only for my clients, and I feel for them, but also for professionals as well. More reporting requirements means there's more work to do, and believe me, we don't need more work. There really is a lot of work to be had, and it's causing unneeded hardship for a lot of professionals to have to deal with just one more reporting requirement that could be handled, honestly, by the people that create the trusts, which would be the banks, whoever holds the mortgages. That's where this stuff really should be coming from, and that's where the reporting requirements should be had. But that's just my opinion. So anyways, hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well. Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below.
We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.